Hello again, and welcome to the High Ground Financial Freedom Podcast, the Freedom Podcast where I get the privilege and the opportunity to sit down with individuals that have either authored a book, cooks, professionals, retired veterans, or active duty veterans, some civilians, people that just have a lot of knowledge and an interest in wanting to share and see others grow and do as well as they're doing in life. So today we're going to talk about family banking. This is a request I've been getting over and over again, and I was reluctant to share it because I go through the whole thing inside of my online training. But I said, you know what? People want the information, so who am I to keep it and gatekeep? So I'm going to share that information. So I want you to think about this. Have you ever felt like your money is working for somebody else instead of you? You know, the things that you do, like save, you invest, you pay off debt, but you still feel like you're constantly starting over from paycheck to paycheck. You're giving your hard-earned money to the bank, the credit card company, the mortgage lender. But what if I could tell you that you could become your own bank? But what if I could tell you? That sounds crazy, but seriously, you could become your own bank. Your money stays with you forever. Instead of you paying out money over here, I'm going to show you a way, or I'm going to tell you a way that you can keep all your money with you. So when you hear the word family banking, what do you think about? I know the name sounds intimidating itself, but at the core, this is very simple. At its heart, family banking is a personal finance strategy that teaches you how to recapture the interest and the principal that you would normally pay out to a traditional bank. Now, if you don't know what interest and principal is, then you should definitely go through and take my training. Okay. And it's okay if you don't, because a lot of this stuff, we don't teach financial literacy in schools, and sometimes it's hard to find. So again, I put that inside of my app training. So here's the thing. It's not about being a bank in the literal sense when you hear the word family banking, you know, with the tellers and the vaults. Instead, I want you to think about it as a specific financial product, a dividend paying whole life insurance policy that is properly structured to put more money back into your pocket. Okay. You put your money into the policy and it grows with a guaranteed interest rate. And then later on, you can borrow against that. And the people that is going to give you the money, which is the insurance company, they're going to look at your cash value that you have and collateralize that. Again, if this is something that you're not familiar with, please take my training. So now, before you tune out because you're thinking, I hate insurance, or isn't whole life a bad investment? Hold on for a second. This isn't your average insurance policy. This is a tool, a specifically designed one that puts you in control. So a lot of times people have heard that you can either get a whole life policy or you can get a term policy. It's not the case. You can actually get a whole life policy, and then you can attach different pieces onto the whole life policy. And again, if it's properly structured, you can also add this one thing called paid up additions rider. That rider allows you to do a whole bunch of things that's going to grow cash value at an accelerated rate. Okay, so I'm going to give you a real world example. Let's make this a little bit more tangible. Imagine a family, and we're going to call these people the Joneses. Okay, they want to buy a new car. So the car costs $30,000. They could get a loan from a bank, and let's just say this is going to be a 5-year loan at 6% interest, okay? Over 5 years, they're going to pay that $30,000 plus the thousands of dollars in interest. And that money, when they pay it out, it's gone forever. Who's getting the profit? The bank's getting the profit. Now, there's nothing wrong with that. That's how we do things traditionally. But what if you don't want to do things traditionally? Let's talk about the family banking model. Now, let's say the Joneses again had been building cash value in their whole life insurance policy for a couple of years. And let's say that their cash value was now sitting at around $50,000. Instead of you going to the bank, or them going to the bank, they take out a policy loan for $30,000. So here's the magical part. The $50,000 that's still inside of their policy, it does not stop growing. Even while you have a loan out, they're now borrowing against their own asset, not somebody else's assets from a bank or a credit union. They can set up a repayment schedule on their own terms. They can say, hey, I want to pay it back in 4 years. When they repay the loan, now here's the crazy part. The interest that they pay back into the loan goes back into their own policy, putting more money back into the cash value. not going into the bank's pocket. They've essentially paid themselves the interest, and the money is now ready to be used again for whatever the next big purchase they have. Okay, whether that's taking a vacation, buying rental property, kitchen remodel, a wedding, business investments. They've essentially been able to recapture the banking function for themselves. So I know some of you out there, even after hearing all this, still got some misconceptions. So I'm going to read these off the screen. Okay. Isn't whole life insurance a bad investment? So here's the thing. On its own, if you're comparing it to a high-risk stock market fund, it's not going to give you the same explosive growth. But family banking isn't about the rate of return. That's something you have to remember. It's not about that rate of return. It's about the control of the cash flow. It's about giving you a guaranteed, tax advantage, uninterrupted compounding of your capital. It's not an investment. It is a safe, liquid, and easily accessible financial tool, okay, where you can take out the cash value without worrying about your credit checks or asking you, what are you going to spend the money on? None of those questions come up, okay? Misconception number 2, isn't a policy loan just another form of debt? So that's actually a yes and no. It's a loan, but the collateral is your own money. You are the lender and you are the borrower of the money. So let me say that again. You are the lender and you are the borrower. The interest you pay go back to the policy, so you're not paying a third party for the privilege of using your own money. I want to be clear, and let me be very clear about this. This is a long-term strategy. It's not one of these get-rich-quick schemes that people talk about. It requires discipline and a fundamental shift in how you view money. So my main takeaway for you is this. The biggest idea is to stop thinking differently. Start thinking differently. I apologize. The money you pay to a traditional bank is the money that you're going to lose forever. That's gone, kaput. Family banking offers a way for you to recapture that money flow, put it back into your family's hands, and allow you to just create money for yourself now and your future generations. So this is just the beginning. If you want to learn more, join me in the financial literacy training inside the app. So right now you're looking at this podcast. Okay, just click back and go down a little bit and you're going to see some training. It's very inexpensive. I made this so everybody can afford it. So this is the podcast for today. Next week, we're going to have an author and we're going to keep moving from there. So God bless. I hope you have a wonderful day. Take care.